ideas that's presented is not to give you trade calls or signal. Okay, myself, we run this educational company based in Singapore. So we believe in these three things in Alpha Play. We want to impart simple strategies to people who is interested to learn about trading. We believe in cohesive community, which is making it fun and enjoyable while you learn and you trade. Okay, which I believe PAFTI is also having that same vision, right? Building a group of community of traders. And of course, the last one is we believe that courses and education shouldn't be too pricey such that it deters people from actually taking up and equipping themselves with certain skill sets and knowledge. Alright, so what you can do is if you're interested to find out more about certain articles, certain blog posts that we write, you can find us on our website as well as Facebook. Alright, you can just Google Alpha Play or Facebook, just search Alpha Play, you'll be able to find us. Alright, then a little bit about myself. I actually graduated recently, officially off from the school last year only. But before that, I've never really studied much, but just go through the motion of getting that paper. So the idea is when I started in FX was somewhere around 2012, sometime close to 5 years ago. So once I decided and got into FX, never looked back. So I just went on, persevere, of course, face certain challenges in my journey. But at the end, I found that FX or even the financial world is something that other careers you actually cannot find. Alright, that give you that freedom in your time, freedom in the financial aspect as well. Alright, so if you want to connect with me, you also can find me on Facebook. I run a YouTube channel as well that we publish videos on the market and such. So you can also find me there. Alright, for YouTube, you can also search under YouTube, just search Alpha Play, you'll be able to find our channel itself. Right, so that's just a little bit about myself and Alpha Play. Okay. Before we go into technical analysis or even JT cover about the fundamental and sentiment aspect of trading, we normally share with traders this analogy in trading. It's very similar to building a house. Okay, every time you want to build a building, you want to construct a building, the most important aspect is actually the foundation. Okay, not your walls or anything on top of it, because your foundation is the base. Right, and it's gonna be everything that you build on top of it. If this is not strong, one day everything on top will eventually collapse. Okay, the foundation is actually your mindset, psychology, and your mentality. Okay, because a lot of times traders neglect this aspect and they just went on and search how to do, what are some of the strategies they can find, what are some of the strategies they can use and such. But they neglected this. This is actually a lot about self-consciousness. You actually need to be aware of your emotions, aware of your own psychology that's ongoing when you do trading, because this eventually, if it's not strongly developed, will take over everything that you build on top, right? If you have a strategy that is profitable, but your psychology is not there, at the end, you won't follow that strategy, right? If you have a risk management, money management technique that is profitable, but because of weaker psychology that you cannot control and you do not have the discipline to follow through, then your money management technique at the end is also useless, right? So this is the most important part, and this is the most difficult thing to actually acquire in trading. Okay. Then, of course, on top is where we talk about the 4 pillars. Right. A lot of times traders only focus on technical analysis, looking at chart, and of course some traders expand it into 2 pillars where they talk about risk management as well. Right. The most dangerous thing you can do is there's no risk management and you only look at PA. Okay. But if you want to fully understand the entire currencies and FX market, these 4 things is what we call a comprehensive and total strategy. Right? So that's what we cap it as a roof for the house. You have 4 pillars of analysis and risk management. Okay, so I'm going to cover TA, technical, and then JT will cover this too. Alright, risk management is actually not very complicated. It's just something that traders just let greed take over their risk management. Alright, but basic risk management is you just decide how much you are willing to risk, and then every trade that you take, you don't take more than that particular risk that you have decided. Okay, so first thing, any one of you heard of this concept called swings in price? Heard of it? Okay, so what it means, alright, I wrote here, is swings are simply how price in the market tends to move. Okay, it sometimes goes up, it sometimes comes down, right? These swings are like waves, it moves up and down. Okay, so what you realize is if you have traded in the market before, you look at charts before, the charts don't go in one direction all the time. it goes up, it comes down, it goes up, it comes down. But sometimes the overall direction can be up, sometimes the overall direction can be down. But whether is it going up overall or down overall, you would see swings and waves in the market. Okay, so this is one concept that you need to build on top, and you need to start seeing market prices move in waves, because this is the foundation that you're going to build on top for all your technical analysis. Okay, no matter what strategies you use, at the end you need to focus on waves, price move in waves. Okay, so I'm going to show you on chart how it looks like. Okay, if you just look at this particular chart, though it's zoomed out a little bit, right? What I want you to see is, or even show you, is that even though price generally from this end to that end, it seems like it's going sideways, but during this entire movement, okay, you can see that price actually goes up, comes down, goes up, comes down, go up. All can identify and see that, right? Alright, so basically swings are all this. Right, so you can see how it goes up, comes down, and goes up, and then it comes down again. Right, so these are all what we call swings in the market. Okay, so from today onwards, when you look at the chart, alright, it will be good for you to be able to identify that price move in waves like this. Sometimes it goes up, sometimes it comes down. Okay, so another example is this. Alright, even though right now it starts over here, generally this chart seems to be slightly going upwards. Right, you can see that it doesn't go one line like this, it moves up and downs in waves as well. Okay, so you should be able to identify price again move up and down in waves. Okay, so the idea here, swings, is that price never move in one straight line. Okay, it always fluctuate up and down, up and down, up and down. This concept clear? Pretty straightforward, right? So that's why this is actually the most fundamental, elementary building block of technical analysis. Okay, the next one, the concept that I'm going to share with you is this thing called structure. Okay, this one here, I'll elaborate a little bit more what we meant by structure. Some traders like to use the term support and resistance. You guys heard of it? Support and resistance, very common, right? This term here, supply and demand, have you guys heard of it? Some of you probably heard of it. Some might be not very clear or even sure what this concept is about, right? But what I want to share with you is the whole idea about support and resistance, as well as supply and demand. They are actually very similar. Okay, though the analysis and the little details that how trader identify these two things might be slightly different, but the concept of how the traders trade these two is actually very similar. Okay, and what we like to do is we actually just put all of this together in one category, and we call them structures. Right? So the definition of structure, or support resistance, or even supply and demand, the idea behind it is that these are areas in your chart or even prices, okay, that when price goes towards it, it tends to have a reaction. Okay, this reaction can be as a support or can be as a resistance. Okay, simply means when price goes towards this area, it tends to react. Either it's going to reject off it or it's going to break above it. Okay, so this one here, this concept of structure is actually built on top of your concept of swings that we mentioned just now. Okay, so the idea is generally at the end of every swing, that is where you can find a structure level. Structure means either support resistance or even supply and demand. Okay, so if I show you on the chart, okay, this is another chart example. The first thing is you should be able to identify the swings in the market movement. Okay, even this down move here is very obvious, it's going down, but you will realize that price don't go straight down like this. Right? It goes down, up, down, up, down, up, down. But overall, it's moving in the down direction. Similar over here, it's going up, but you can see it goes up and down, up and down, up and down. Okay? So within all this movement, you will realize that there is actually swings in it, and at the end of every swing is where your structure can be identified. Okay? So I drew in the swings. Okay? At the end of every swing is where your structure can be identified. Okay, so this is a very quick guide to how you identify where are the key areas in which price tends to have a probability that it will react off it. Okay, so at the end of the swing over here, you can see this is a structure level. When price comes back in the future, it tends to have a certain reaction of it. Right, this is your end of your previous swing. Then you extend it. When price comes back in the future, it tends to have certain reaction of it. Okay, similar, this one here, if you extend, it hasn't tested, alright, but in the future, if it goes higher and tests this area, very high chance you would see a reaction out of this as well. Okay, because you can see all structure will have a certain reaction when price goes to it in the future. Some of this structure level, okay, can be stronger, some can be weaker. Okay, but we won't discuss that in today's context and to how we can identify strong or weak, because that one is back to the concept of support and resistance, how you identify a good support resistance, how you identify a weak support resistance. Okay, but today's idea and concept I want to share with you, right, is that at the end of every swing is an area in which you would see structure, and that's the area in which you will see price has a higher chance that it's going to react off it. Okay, another example of this chart, okay, you can see its general direction is from the bottom to the top, but if you follow it, how price has moved, you can see it moves up and down in waves, in swings. Okay, and if you draw in all the movement, okay, then at the end of the swing is where your structure tends to come in. Okay, similarly below here, on top here as well. Okay, so what you can see is if all this has yet to happen, right, when price is only over here, you can see that when it comes back in the future, this is your structure level that was previously at the end of your swing. When it comes back in the future of this structure level, you can see how price has a certain reaction of it. Okay, not all the time, it's not going to be 100% so perfect all the time when you trade, but there's a very high probability that you see a certain reaction around that level. Right, similar for this. This was your previous structure. When price break and come back in the future, you can see how it reacts of it. Okay, certain levels like this wasn't tested, alright, so in the future when it comes back down towards this area, maybe you will see a very high chance that you have a certain reaction of it. This reaction can be either a support or a resistance. Okay, yeah? Right, the same for the top. Right, every end of the swing is a support and resistance is a structure level. Alright, so far so good in terms of these two concepts, swings and structure. Okay, huh? Okay, so the idea is these structures from what we call a high and low in the market. Okay, so this one here is your high, this one here is your higher low compared to this. This is a higher high as compared to this. So these structures that you identify on this chart becomes your highs and lows in the market. Okay, anyone wants to guess what is the function and the usage of identify highs and lows? Oh, I heard something. Sorry? Yes. Sorry again, trend. Yeah, very good. Alright, exactly what I want to talk about. This highs and low is what builds on the definition of what is a trend. Okay. A lot of times when you do trading, or some traders would say, oh, it's an uptrend. Then some other traders will say, oh, but I don't see an uptrend, I see a downtrend instead. Right? The difference between different traders, different perspective is that they are not very objective in the definition of what they define as a trend. Okay? So what we do is we have a very clear and distinct way of defining whether the price is an uptrend or is actually in a downtrend. Okay? But this one over here is a very general definition of an uptrend. Okay? So uptrend is identified with higher highs and higher lows. Okay? We actually highlighted this word here, and it's because you need to have both. Okay? You cannot only have one and then you call it an uptrend. So you cannot only have higher highs and then you do not have higher lows. It's not an uptrend. Okay? Similarly, for downtrend, it's the opposite. You need to have lower highs and lower lows. You need to have two things happening at the same time. Okay? If any of this is missing, that's what we call is actually in a sideways range environment. Okay, yeah? So I'm going to show you some example of trends. Okay, this one, what is the trend? Uptrend, right? All agree?
Yes. Yeah.
Okay, so why is it an uptrend? Is because we have higher high, higher lows, higher high, higher lows. Okay, what about this one? Sideways. Alright, simply because you have higher high, higher low here, but over here you have a lower low, lower high, higher low. Okay, you do not have a combination of lower low, lower highs or higher high, higher lows. Okay, so over here is a sideways. What about this one? Yeah, this is a downtrend because again you have lower low, lower high, lower low, lower high, lower low, lower high. Can so far can understand trend and the definition of it? Yeah. Okay, this one, what you just now also observed is that some people say this is up, some people say this is down. There's even people say, oh, it's sideways. Okay, so then go back to the definition. What can you see in terms of the most recent movement in price? Correct, right? So now if you follow back the definition and see what is the most recent development in price, you should all come to an agreement that the most recent one is actually a downtrend. Okay. Yes, it can be a very start of a downtrend, right? Because you just have lower low, lower high, lower low. You just meet the minimum requirement of a downtrend. So it can be a very early downtrend. It can be a start of a transition into a downtrend. Okay. But what is happening over here is already showing you sign that it's a downtrend. Okay. So some traders actually use what we call technical indicators to help them identify and confirm the trend. One very common one is your moving average. Okay, so some traders like to overlay two moving average. This one over here I put is a 50 and a 100. Okay, I don't personally use moving average, right? But there are traders who use this to help them confirm the trend. So how they use it, very common, is if price is below your MA, is in the downtrend. If price is above your MA, it's in the uptrend. Okay. Some traders like to use crossover. Crossover means the two MA, when they cross over each other, it signifies a transition of trend. Okay. So over here, when the blue line crosses the purple line, it becomes a downtrend. Over here, when the blue line crosses the purple line to upside, it's a transition to the uptrend. So different traders have different ways to identify and confirm a trend. Okay, so I'm just showing you another easy technique that you can use to confirm the trend. Okay, but what we usually do, alright, is we are using structure, which was the concept that I covered earlier. How to identify trend is that once you identify that if your structure has a lower low and lower high series, okay, it is transiting into a downtrend already. Okay, so in this case, this is your Australian dollar. What I did was I actually zoom in to the most recent movement. Okay, this one over here I zoom in, and this is what you're gonna see when you zoom it in. Okay, so it's very obvious and clear that you have a lower low, lower high, lower low, lower high, lower low, lower high. So far so good? Yes, huh? Okay, so next is if price form these 3 points of higher high, higher low, or lower low, lower high, you are already in a trend. So the minimum requirement for a trend to happen is 3 points. 1, 2, 3. Okay. Those who are familiar with price patterns, some people will call it A, B, C, D. Heard of that? Some of you probably heard of it, alright? So if you have 1, 2, 3, or you have one A, B, C, D, it's already in a trend, right? Depending on whether you get a lower low, lower high, lower low, or you get a higher high and higher low, depending on what's happening, you either get an uptrend or you get a downtrend. So far so good? Okay, so if I show you this here, so this is, if it's coming down, this is a downtrend, right? Which is what I showed here. But what about this? Is this still a downtrend? Okay, why no? Those who say no, why is it not a downtrend? Anyone knows the answer why you say it's no longer a downtrend? Okay, then my question to you is, what about this?
Okay.
Is this still an uptrend or downtrend? It's still down. Okay, so what's the difference between this and let's say this? Yeah.
For me, it's still a downtrend.
It's still a downtrend. Both is still a downtrend. Oh, okay. So maybe get back to this question. Why is this still a downtrend? This is not a downtrend.
Based on your explanation here,
Yeah.
First criteria for a trending market, you need a 1, 2, 3 points for the
Yep.
ECD or the Thunderbolt pattern. In that case, the A point is not yet broken, still is considered firm as a downtrend.
Oh, okay. So your A point is here lah. You're referring to that. Okay. For those who say this is not a downtrend but this is a downtrend, do you know why you say that? No, but you just feel that it's no longer a downtrend. Okay. So a lot of traders feel when they do trading, you shouldn't do that. Okay? Because today you might feel certain way, tomorrow you might feel another way. Then what you're gonna happen in your trading is someday you're gonna profit, someday you're gonna lose, someday you're gonna lose more, someday you're gonna profit very little. Okay, because you're not consistent. Okay, so let me explain to you why this is not in the definition that we do. It's not a downtrend, but this is a downtrend. Okay, what you realize is we need a minimum requirement of 3 points. Okay, so you have 1, 2, 3, and then just now we mentioned about swings. At the end of every swing is your structure. Okay, so at the end of your swing is your structure area. Okay, so the difference between this line here and this line here is that this one, okay, it hasn't break your previous 2 structure. Okay, this one, it has broken above it. So that's the difference between one is still a downtrend, the other one is no longer in a downtrend. Can you understand?
Yes.
Okay, now, if I extend it further, okay, so imagine now it's no longer a downtrend, it has broken and it comes down. What are we in now? Okay, some say up, some say sideways. Okay, why up? Do you know why up? Okay, I'll share with you. This one, in definition, according to what we define, is not an uptrend because you only have a higher high. This one, you haven't formed a higher low. Sorry, this is a high, this is forming a higher low, but you are lacking 1 more point. Because we need 3, right? This is 1, 2, you lack the 3. Can see that? Okay, so if price does this, then we are in an uptrend right now. Okay, then my next question is, if this continue going down, what do we have now? Okay, this one is below this. What do you have? What trend? Sideways, down, up. Down. Okay, anyone says it's in a sideways? Sideways? No? Okay. If you don't say sideways, you are correct. Because what you have over here, this is your 1 move, this is your 2nd move, this is your 3rd move. Okay, the one in red, you can see you have a lower low and lower high. Catch that? Yeah. So what you realize is this simple concept of defining what is an uptrend and downtrend, a lot of traders, even though they might have traded for some time, are not very clear in how they themselves define whether it's an up or down. Okay? The simple thing is, if you cannot define whether it's going up or going down, and you do not have a definition of it, you wouldn't know whether you want to buy or whether you want to sell. Then most of the time what you're going to do is, I'm feeling that it's up now and I buy it. I'm feeling it's down now and I sell it. That feeling can change in seconds. Let's say you feel that it's going up, you go to the toilet, come back, and then you see it, hey, suddenly I feel like it's down, then you sell it again. So that kind of decision making process needs to be consistent. Okay, so this is one simple exercise to show you guys that even simple concept like uptrend and downtrend, you need to know how to define it clearly. Okay, so from there, let me introduce to you one simple strategy based on this simple concept. Okay, this strategy is, we just call it structure trading because the idea and the concept is actually coming from this whole concept of identify swings, identifying structure, and identifying the trend. Okay, so this methodology here, it only works, and it works well only in a trending environment. So if your market condition is not giving you a trend, this strategy here, you cannot use it. Or I would say, even if you use it, you shouldn't be able to find any setups that you can take to trade the market. Okay, so the process here is very simple, 5 steps. Alright, the first one is identifying the current trend direction. This is the process that we have done just now. Okay, what we have covered just now in the 3 steps is to identify current trend direction. Okay, after that is where you establish the previous structure level. Okay, that is a very simple process. For example, if this one over here in red, okay, what you need to do next after you identify that this is a downtrend in the red color movement, you just need to establish the previous structure, which is over here, and of course if it turns over here, this will be your bottom. That's your next step. Okay, then the third one is potential trade setup around the area. So all this structure level becomes your potential area that you want to monitor if price goes towards it. Okay, so naturally if it's a downtrend, you wouldn't want to look for buy setups. You only want to look to sell so that you can follow the general direction of the trend. So the idea is if price comes towards this area, you want to look for sell. If price comes towards this area, you also want to look for sell. Okay, later I'll show you on the chart. The next part here is this thing called wait for confirmation. Okay, wait for confirmation, I'll show you what we mean by looking at candlesticks. Okay, and the last one is pulling the trigger, meaning after you've done all your analysis, you need to take the trade or else nothing will happen. You are just doing an analysis. You are not trading yet. Okay, so I'll give you an example of the walkthrough of this strategy. Let's focus on this part. What trend is it? Up, right? Okay, all of you should be able to see because you have 1, 2, 3. You have a high, you have a higher low, you have a higher high. Okay, even though it's a very start of an uptrend, by the definition, it's already in an uptrend. Okay, so you'll be able to identify 3, 1, 2, 3 is an uptrend. Okay, then the next step will be to establish where your structure level is. Okay, just now we talked about structure always is at the end of your swing. Okay, so you have 1. Okay, so this is an uptrend. So your bias is buying it, bullish. You want to find buy setup. So the next step is the structure over here and over here. At the end of all your swings, you have a structure. So far so good? Yes. After that, right, you want to see that this entire area here, it's the potential area in which you want to find a trade setup. Okay, because if price comes down to any of this area and it didn't break this level, you are technically still in an uptrend. Okay, it can come down here, goes up, it's an uptrend. It can come down, touch here, and then goes up, it's still in an uptrend, as long as it never breaks this. But once price goes lower and break this level, that's where you do not have an uptrend anymore. Okay, so once you establish this, the next step is look for confirmation. Okay, so I know that if you studied a little bit into Japanese candlesticks, you realize that there is a lot of candlesticks pattern, right? But I'll just summarize it into 3 categories. All the others is actually under this category somehow or another. Okay, there are generally 3 types. This one is 1, this one is 1, and this one is 1. Do you know what's the name of this? Don't know, right? Okay, never mind. I also don't know. Doesn't matter. Okay, knowing the name doesn't help you make money. Knowing what's behind it helps you make money. Okay, so the name, not important. Okay, just testing only. So because there are some traders who go and memorize all these things, but they don't know how to apply it. Doesn't help them at all. Okay, so the name, if you don't know, doesn't matter. I also don't know. Don't worry about it. Okay, this one and this one, I also don't know. This one, I think a lot of people will know. You know what's the name that generally traders give it? Oh yeah, okay, pin bar. So this one, a lot of people know. This one, okay, yeah. So you guys know. Okay, this one, I don't know honestly. Okay, but in candlesticks pattern, you can all put the candlesticks pattern into these three categories. Okay, so basically, if you do not want to remember the name, you just give it a number. Type 1, type 2, type 3. Okay. So this is type 1. Okay, this kind of candlesticks, the story behind this kind of candlesticks is that it's telling you that this movement, whether is it going up in green or coming down in red, both of this candlestick is telling you that they are very confident in moving. They have a very strong momentum. Okay, doesn't matter what time frame or what period you are looking at, but as long as it gives you something like this, it's telling you that this candle is moving very strong in a certain direction, is very certain where it wants to go. Yeah. What about type 2 candle? What is it telling you? Yeah, alright, indecision, uncertainty, right? That's what we call the doji, right? So type 2 candlesticks is telling you that price wanted to go up, wanted to come down, and then it cannot decide where it wants to go, so it decides to just close somewhere in the middle. Okay. The type 3, what is it telling you? Yeah, rejection, reversal, right? It's a pin bar. So this kind of candlesticks is telling you that it tested the bottom of the high and it decided to reverse. Okay. So generally all three kinds of candlesticks, all types of candlesticks, you can either put it in 1, 2, or 3. Okay. So let me ask you the next question. Which candle is the easiest to make a trading decision? Okay, actually, all should give you an easy decision making process. Why? If you see this, some traders trade it. It's very clear cut. If you see this and you say, no, I don't want to trade it, it's also a decision that you make. Okay, so no trading is still a decision that you make consciously. Okay, so all these three candlesticks should give you very easy decision making process. If you see this, take the trade. If you see this, don't take the trade. If you see this, take the trade. That's it. Yeah? So it's not, oh, I see this, I do not know what to do. You know what to do, you just don't take the trade. That is also a decision in trading. Okay? So in confirmation, what we mean is we want to look for two kinds of candlestick, type 1 and type 3. So if type 2 happens, we don't take the trade. Okay, so this is what we call confirmation. So let's go back to the strategy that the chart I showed you just now. Right? Ideal candle is 1 and 3. So go back to this chart, alright? So now, over here, would you want to take this trade? Right now, price has come into this area that you are monitoring. At this current moment, this very moment, would you want to take this trade? Okay, anyone wants to take a trade? Very good. So I'm going to show you what happens next is, it goes against you. Okay, right now, who else would want to take this trade? Will you add more positions?
No.
Will you exit your position?
No.
Okay, hold. Anyone wants to enter new trade? No. Okay. Next, what about this? Oh, it goes further down against you. This one now, will you want to take it? Who wants to take a trade now? Just to share, this kind of candlesticks, is it 1, 2, or 3? It's actually more of 2. Okay? So now this one, who will take a trade? Okay, who still don't take trade? No. Okay. I want you to remember your decision. Some of you don't take trades, some of you take trades. Huh? So now you have 2 positions. Okay. Next is, according to the strategy, you buy here, you put your stop loss below, you put your take profit at your previous structure. Okay, that is based on the strategy, alright? Very simple. So next, what happened is this. Okay. Those that never take trade, you miss out this opportunity. Those who take trade, you profited. For him, he took 1 here, he took 1 below, he profited 2 times. Okay, but his risk is doubled because he takes 2 positions compared to those who only take 1. Okay, so what I want to share with you is this kind of confirmation. Some traders might still feel very scared to take the trade. Right? Some traders are more aggressive that when they see certain opportunity, they straight away enter. There is no right or wrong in trading, okay? But what you need to decide is this thing, which what I've went through with you, is an example of what we call a plan of the trade or a trade plan itself. Okay? You need to be consistent in every time you take trades. Cannot be sometimes you feel like it, sometimes you don't feel like it. Okay, huh? So that confirmation over here is to wait for a certain type 1 or type 3 candles within this area. That's where you can take that trade. Okay, so give you another example. This one, what is the trend right now? Down, right? Okay, so this one, following the definition, you will also see 3 moves down. You have a lower low, lower high, so this is a downtrend. So the bias is you want to look for opportunity to sell. Okay. The next step is structure. Okay. So the end of each swing over here is all your structure levels. Okay. Then now you have identified that this is the area you want to look for trade setups. Okay. So next is you want to wait for the confirmation to come so that you can pull the trigger. So the idea is right now, do you want to take a trade? No, right? Because it's still very far off this area. Or you buy. Okay. If you buy, it can continue falling also. So normally my suggestion is if it's a downtrend, you go with the trend. Okay, you don't go against it unless you are experienced. You have a certain strategy to trade against the trend. Then you can do that. Okay. So right now, would you want to sell? Now it has entered and touched the area. Who wants to sell? Sell. Now also have 38.2. Not selling. Okay. Then what happens next is this one. Who wants to enter now? Okay, some. Okay. So what is this candle? Type 1, right? So if you choose to enter, okay, you put your sell here, you put your stop loss above it, and then your take profit can be somewhere here. Okay. For those who are more aggressive, that means you want to go for more higher profits, you actually can just remove your take profit and then you just trail your position. Move your stop loss accordingly. Right? But the simple one is you just put a take profit at the previous structure so that when it goes and touch this structure, you actually get up in the profits. Okay, so what happens next is this trade is pretty simple. You go straight and touch your take profit. You understand this strategy? Okay. It's not a very fanciful one, but we traded this for the past 13 months. So it's slightly more than a year. The hit rate, that means the winning trade compared to the losing trade, the percentage is just about 50%, meaning out of 10 trades you take, maybe 5 lose, 5 win. But because what you realize is your stop loss and take profit ratio, your risk to reward ratio, is actually more than 1:1. Okay, this is exactly 1:1, but the previous example that I show you is more than 1:1. Usually, we take trades only when this risk to your reward ratio is more than 1:1. So anything that's more than 1:1, if a 50% winning rate, you are already making money. Okay, so this one we tested for 13 months. It is profitable based on risking 2% risk per trade, taking all currency pairs, which is 26 currency pairs. The return for that 13 month based on a 50% win rate is about 96%. Okay, so the winning ratio might not be very high, but because of risk to reward, it's a profitable strategy. Okay, okay.